Hello and welcome to Scale by Design. Today we're joined by Ben Miller. Ben, thanks for joining us. How are you doing?
Thanks a lot for having me, James. I'm super excited to be here.
Yeah, we're pumped. I'm pumped too. Would you mind, before we jump into it, could you share with everybody a little bit about yourself?
Sure. Yeah. So after graduating college, I was on Wall Street for 8 years trading foreign exchange derivatives. So for those of you watching on video, that's where all my hair went. Typical trading floor job, and decided I wanted to do something more entrepreneurial. So I'm very passionate about personal finance, and so I decided to hang out my own shingle, helping people figure out how they're doing financially, so they can make better decisions.
Cool. So actually, before we jump into some of the topics we discussed, could you tell us a little bit more about your product and what it does and who it serves?
Yeah, so my company's called ChroniFI. The product is essentially it's personal finance software that helps people simplify their finances by understanding them in terms of time instead of money. And so people are able to, throw in their details and see, oh, here's how long it'll be until I'm fully financially independent, or until I can take a pay cut to do more meaningful work, and then just mark to market on their financial health and say, hey, here's how long I can afford to be financially independent right now, et cetera. So it's basically an engine that helps people to make decisions that are aligned with their long-term best interests.
Is it sort of like where my head goes immediately is like a forecast, like a budget forecast?
Yeah,
In a sense, is it?
it's a great question. It's basically you've got tons of players out there that are doing budgeting, like Mint, YNAB, et cetera, some really solid companies in there. And so they're kind of past oriented, like, what did I spend my money on last month? And you got plenty of players that, to your point, are focused on the future, personal capital, Wealthfront, et cetera, that are focused on, here's I've got money, what should I do with it? It's future oriented. Where we're trying to slide in is essentially hitting people exactly where it matters in the present, helping people understand, how does what I'm doing right now impact my overall financial health.
Nice. Okay, that's really cool. And so right now, where are you? Because in terms of your growth stage, I think I saw on LinkedIn that you have like a seed round or a pre-seed round or some type of initial investment. Where are you in the product development roadmap? Like, do you have are you post revenue? Like, what pre-revenue? Like, where are you in that development cycle?
Yeah, it's we're very early on. As you pointed out, we got out of an accelerator not too long ago, and so that was a great experience. The accelerator is called Launch. Basically, that was super helpful just in terms of expanding reach and network and stuff like that. So even before we joined the accelerator, we had and still have a product live in the market, and so early days in terms of accumulating customers and things like that, but at least we've got our first wave of paid subscriptions, and we're kind of off to the races.
Oh, that's great, man. I'm gonna have to check it out.
Yeah, do.
Sometime this week. I'll check it out. Is it like a free trial type of deal, or how do you get started?
Yeah, basically it's a 30-day all access free trial. We don't want anybody to join up unless they're convinced that it's worth it. So basically we want to make it totally transparent and forthright. That's one thing that I think I've got a strong opinion about within fintech in particular. I think people are waking up to the fact that if you're not paying, then you're the product. And so basically, we just have a very straightforward business model of our sole incentive is to provide the best possible product for our users, rather than, selling data or attention or things like that.
I love your website, by the way. So I'm just looking at the design on the site.
Thank you.
It looks really good.
Thank you. I
And
appreciate
I
that.
think you all struck the right balance between like simple, consumable like information and also providing enough context into what people are going to get from the product. So yeah, it looks really cool, man. I'm gonna have to
Thanks a
check it out
lot.
for sure.
Yeah, I'm excited to help you out. Yeah, no, it's tricky, right? Because we're trying to educate people on, like, here's the way that you should be thinking about your finances, which is not easy. Like, oh, here comes the seminar, like basically helping people think through a new way of thought, in a way that doesn't make them sorry that they check things out in the first place, because once people do see that light, then it's like, oh man, this is the way I should have been thinking about it all along. But helping to bring people up that curve is a big part of what we're up to. And frankly, we're trying to address something that isn't addressed well in the rest of, the way we've set up our society. And that is that like personal finance is just something that people are not educated on, like even at, working, going to a good school and then working on Wall Street. It's like, I didn't learn anything about personal finance in either one of those places. And so it's like, what chance does anybody have to be educated on this stuff? It's like, I was lucky to have great parents and, access to books and blogs and stuff like that. But who's gonna find the time for that? So that's the battle that we're looking to fight here, is help people figure things out for themselves.
I love it. Everything I learned about personal finance was actually from Tony Robbins.
Right?
Yeah, I did. I learned so much. Like one of the best tips I ever learned was to automatically have part of your paycheck distributed into savings and investment accounts, so it doesn't
Yep.
even hit your primary checking.
Right. No, it's genius, right? Like that's the thing, is like, if you can make those single decisions that make 1,000 decisions for you in the future and just have that leverage, that's the way to making better decisions, is just having less decision fatigue.
Right. Just make one good decision and then let that be on autopilot and
Bingo.
serve you for years in the future. Right.
Exactly.
I love that. Okay, really cool. So one of the questions I had for you is, what was it like going from Goldman Sachs to starting your own products company? And I'm also really interested, you were saying that you actually coded a lot of you were doing like hands-on development. So between working at Goldman Sachs and doing, future options trading, like what foreign exchange derivatives trading, it sounds like, I don't know if I'm saying that right, but how do you do all of that full time at Goldman Sachs, which I'm assuming, I mean, I don't know, you tell me, but probably a significant workload. I'm assuming that you had to work your tail off there. And when did you learn how to code? And so and how did you make that transition from like Goldman Sachs to starting your business? I just have so many questions. I asked you like 5 in a row, but
yeah, no, that's great. We'll dive right into
Yeah.
it. Yeah. It's all kind of wrapped up in the story of the company, to be honest. It's something where I was, let's see, I was at Goldman for 8 years. And so I was there for long enough that it's like, maybe this is just what I am now. Maybe I'm a trader and that's just put me out to pasture and this is what I do. So it had been a while since I had like really taken on a new skill. And so I was insecure, frankly. I didn't know, maybe I don't know how to learn things anymore. You come out of college and you're bright eyed and bushy tailed and all that and ready to take on the world. But then once you start getting, kids and a mortgage and all that kind of stuff, it's like, okay, well, you kind of crave stability in a lot of ways. And so anyways, like learning to code for me was kind of served 3 purposes. One, I taught myself that I still know how to learn new things, because I went from 0 to dangerous in pretty short order in terms of learning how to code. And then 2, I found that there was work that was intrinsically satisfying for me. I had come to assume that work was just something that I did in order to sell my time so that I could have money and buy happiness with money. And I realized like, oh, wow, there does exist a form of work that I actually like doing. There's a signal in there when like I was waking up at 4 to practice coding before I went to the gym, before I went to the office. And I wasn't getting paid to do that. And so it's like, okay, well, there are some people in some places that are getting paid to code. So maybe it's worth tugging at that thread a little bit more. And so anyways, then, of course, the other side of learning to code is it's a useful and marketable skill. And so, having that to not only, bolster my own credentials, but also to give myself the power to create my own product was a very appealing option.
for sure. So what was that transition like though, going from I guess an enterprise environment, right? Something that's very structured, very conservative, old school,
Mm-hmm.
process oriented and driven, to something like a startup where there's just no process and you have to figure out like, okay, how do I build this product out from scratch? I mean, did you have a lot of good mentors? Did you talk to a lot of, CEOs, that your product CEOs? Or, I mean, how did you make that shift successfully?
I love this topic because it's something that I've, especially upon reflection, I've had a chance to kind of try to really understand that, because the initial nature, right? Like I was hyper vertical. That is the nature of my role when I was on Wall Street, was like I was trading foreign exchange derivatives. And so it not only that, but exotic derivatives. And so it's like, I got to a point in my career where it's like, I could count on my thumbs the number of places I could fly that trade. You know, it's not like I was a consultant at McKinsey where I could just kind of like plug and play, go do any job in the world. It's like I was very, very specialized. And so getting to a point where I was like, maybe this isn't what I want to do for the rest of my life, that's scary, because it's like, okay, well then what? I'm going to be competing, you know, if I jump into tech, I'm going to be competing against a bunch of young and hungry, you know, Stanford CS grads. And so it's like, how's that going to go? But it's, you know, you can see based on the way things have gone that that's ultimately the route that I chose. And I'm really glad I did. But, you know, to your point, starting out there, I'm incredibly grateful for that opportunity, because it's just like, in terms of places to begin a career, there's, in my opinion, there's scarcely any better one out there. I was surrounded by incredibly intelligent people and incredibly motivated people, and kind of came to take that for granted as just, oh, well, this must be what people are like. You know, they're all hard charging and ready to solve problems and think creatively and all that. But you know, then switching to entrepreneurship, it goes from, you know, I'm on a trading floor the size of a football field, sitting cheek by jowl with like everybody else. And now it's like, I'm one dude in Colorado, you know, sitting in his office. And like, so it's entrepreneurship can be lonely, but I have found that, you know, the process of plunging into this space has been incredibly fruitful. You know, one big change, you know, for example, is like you go from like I went from like an East Coast, you know, banking mentality of, you know, you're trying to get a bigger slice of the pie, to now in entrepreneurship space, it's much more of an ethos of like, I don't care how big my slice is. Let's just make the pie huge, and then who cares? And so it's much less of like a zero-sum game, and it's much more of like a rising tide lifts all boats phenomenon. Where, yes, to your point, I have benefited tremendously from people who are willing to bend an ear and talk with a new, fresh entrepreneur and share expertise, not because they think that I'm going to pay them back in some way in the end, but oftentimes because somebody else helped them originally and they want to like pay it forward. And so that whole process and the willingness of people who shouldn't be taking my call to take my call and give me advice and counsel and all that kind of stuff, it's pretty amazing, like to plunge into that atmosphere of just people who want to build interesting things.
Hey, what did the accelerator you were part of, you said it was called Launch, is that it?
Yeah. Mm-hmm.
So what resources did they provide you with? Was it more just like seed funding, or did they really provide like, hey, here's how you think about product development, here's how you think about, you know, talking with customers about what they would value, or, you know, here's how you do GTM, or this is the marketing initiatives you should start? I mean, like, what kind of guidance were they giving you throughout that program?
Yeah, I mean, the program was great. First off, I'll start by saying that. Basically, what I've found as I've moved, you know, from Wall Street to startup land is that, you know, on Wall Street, it's like, if you know Goldman and you know JP and you know, like, there's like a handful of banks, and if you know them, you know the street. Whereas in startup space, it's like everybody and their grandmother is an investor of some type, or is involved in the ecosystem in some way, and all of them are sliced and diced among, you know, different stages, different verticals, you know, whatever it may be. There are so many different ways that they segment themselves. And so what I found is that the same is true for accelerators. And so I wasn't even thinking about fundraising, to be frank, until late last year. And when I, you know, became aware of this whole like accelerator ecosystem, I was, you know, one of the things that quickly became clear was that they were very good at certain things that were extremely complementary to my own necessities. And so, for example, like their network is excellent, their reach is excellent, and those were two things that I frankly didn't have at the time. And the one thing that I really liked about their program is that it's very much kind of like a baptism by fire. It's very much like it's not like a hold your hand on the business for 3 months and then demo day at the end type of thing. It's like every single week you're talking with investors, you're talking with, you know, people that can help point you in the right direction, not only because, well, I guess I'll say this, because they've seen so many different types of things. And so their opinions, while individually you may have to take them with a grain of salt, in the aggregate, when you're building a mosaic of useful feedback, it's so incredibly useful to just get a whole bunch of people's opinions. And then, it's up to the entrepreneur to figure out what to take on board and what to check out.
Yeah, for sure. So I think I pulled up the website. It's the launchaccelerator.co. Is that the right one?
Yes.
Oh, cool. Yeah, it looks like they've had a lot of companies go through the program.
Yeah, and the thing that I also really like about them is it's only 7 companies per cohort. And
Oh,
so,
that's dope. Yeah.
you get some real attention from the team there, and you don't feel like drowned out amongst a sea of dozens or hundreds or whatever.
For sure. What was the process like to get accepted into the cohort?
It's a great question, and one that is less familiar to me. Honestly, they found me on the web, and well, I guess liked what they saw, and so the rest is history. I wasn't even thinking about raising funding. I was going to bootstrap, self-fund, etc.
Mhm.
And so I was involved in a startup tournament online, and they happened to spot me on the leaderboard there.
Dude, so in cohort 2, 2 of my clients,
Yeah.
Captivate, Lead IQ.
Nice. Yeah.
Yeah,
I
man.
mean, that's Jason's got a pretty decent footprint in that world.
Dude, I should introduce you to May, the CEO of Lead IQ.
Let's do it.
I'm going to send you her LinkedIn profile right now
Yeah.
on Zoom. Just shoot her an invite and tell her that like I told you to reach out or something.
Nice. Cool.
Yeah, so she's we worked with her a lot. Like, so what my company does is basically tech companies borrow recruiters from us.
Mhm.
So Lead IQ was going through a huge hiring push last year. So we helped them hire a bunch of people.
Mhm.
And May is she's incredible.
Nice.
So that's so cool that she went through the same accelerator as you did.
Yeah.
And so Captivate is the other one.
Uh-huh.
Captivate, and that's spelled like captive and then the number 8 at the end.
Oh, okay, cool.
Here, I'll type it so you can check it out.
Yeah.
But if you ever want any intros to anybody at either of those companies, let me know. But that's so cool, man. Small world.
Sweet. Yeah, definitely.
Yeah. Let me see cohort 1. Yeah, it's weird. They're both in cohort 2. Those are the only companies that I've worked with. And all the other cohorts, I haven't worked with any of the companies, but something about cohort 2, that must have been a special year.
Something in the water. Yeah.
Cool, man. So one of the things that I know you had mentioned earlier was just kind of like this concept of reinventing yourself. Maybe being like choosing to be vulnerable and do something new and dealing with imposter syndrome, which I think is I'm glad that you brought that up, because I think there's a lot of executives that feel the pressure to like just totally avoid talking about that, because they're like, no, I got to maintain this facade of like whatever whatever people think. But this is obviously BS, because if you're growing, that means you're outside of your comfort zone. And if you're outside of your comfort zone, you're going to be uncomfortable. And if you're not uncomfortable, then you got to look in the mirror and figure out, like, am I really pushing myself? So
yes,
it's a natural byproduct of growth. I consider it growing pains, right? And so how did you kind of deal with that uncertainty, right? Because as you said, right, like you get to a certain place in life where you start to value certainty more. It's like, maybe when we're younger, we value the variety a little bit more. And then as we get a little bit older, like we want predictable income and these types of things. So talk us through like the just mental process of overcoming some of those fears in the early days.
Yeah. So I'd say, imposter syndrome is something that, like it or hate it, it's part of the way that I see the world, and a part of the way that honestly a lot of people see the world, particularly people who are, 1 foot over the abyss in either entrepreneurship or some sort of other creative endeavor. And so it was definitely endemic to my time in my earlier career. And it's no different now in entrepreneurship land, because there's so much to learn, so in my prior career, it was vertical. It was like, there's a million questions that I should know the answer to, and I'm just constantly waiting to be found out for not knowing the answers to them. Or not knowing the answers to some meaningful fraction of them, at least. And so it's like, now it's a different kind of, imposter syndrome. It's just like that verticality has been replaced by this horizontal version of imposter syndrome, where it's like, okay, yeah, I went from something where I was like hyper specialized on one thing to now something where I have to keep my eyes on marketing. I need to keep my eyes on recruiting and, sales and partnerships and getting the revenue into, like, basically product. I mean, you name it, an entrepreneur's job is to do that. And by the way, if one of those things fails, then the whole thing falls flat on its face. And so good luck, like that's no, exactly. And so it's like, if it's kind of inherently crazy, right? Like anybody
Yeah.
who's going into entrepreneurship is by nature saying like, listen, the whole world's wrong, I'm right, here's why. Because if that weren't the nature of it, there'd be no opportunity there. And so that kind of, one person raging against, the whatever the universe has to throw at him or her type of thing is it takes a lot of getting used to, and it's an emotional workout for sure. But sooner or later you kind of figure out like everybody's winging it. Everybody is doing the best they can with what they got and failing forward. That's the thing, is like a lot of people in, the kind of orbit or circles that I used to run in that kind of, Wall Street sort of lens, come from a similar type of background where, like, frankly, they've never failed. And that's a big deal, because a lot of them are incredibly capable people who are just afraid of failing. And so going into startup land is pretty not for the faint of heart, right? Because it's something where you're going from like, oh yeah, I've got this long string of W's on my track record, and you know what I'm going to do? I'm going to go take a crack at something where the odds are 90% that I'm going to have an L next. Like, how do you convince yourself to do that? And for me, a big part of the journey was honestly what I built the product to do, which was just like trying to distill this complex nature of at least my personal finances and go like, what does it all mean about whether I'm operating from a position of strength or weakness? How do I boil this down into something where I can go, yeah, you know what, it's time to take a risk.
Yeah, I love that. I mean, it's interesting, just as I've evolved throughout my career, like I've been the CEO of Secure Vision for 7 years.
Mm-hmm.
So the company has completely evolved and changed. I mean, basically it's been a new company since 2020. We like overhauled the whole operating model, everything. Right. But it's interesting. It's like the more experience and senior I get and the more comfortable I get in my role, and my understanding of how to scale is significantly better. And then just also getting older and getting more comfortable in my own skin, like
Yes.
a combination of those things. It's like every year I care less about having all the answers and just being open and vulnerable about, I don't know, like, what do you think? Right. And just having that conversation. And, I know the things I need to know that make me competent in my role, but, a big part, I feel like, of being a CEO and running a company is having the wisdom to know, when to be stubborn, right, and hold the course, and when to be the student.
Yes.
And I think you have to be incredibly stubborn with your overarching goals, right? Like the things that your mission, for instance. But you have to just know when to be the student. And I think it's okay. Like I don't have any issues now. I don't know if I could have done this 5 years ago, but if I'm on a leadership call with my VPs and advisors and stuff like that, and I'm stumped, like, I'll slow down and just say like, all right, like, let's I want to think through this. I think this has big implications. We need to get it right. I'm not really sure which direction to go right now on this. And what do you all think? Like, what should, and work, and just being okay saying that, like, and honestly, it's what I noticed too, like beyond with leadership, even doing that with employees is okay sometimes. Like, obviously, context matters, situational, but you're more relatable as a leader when you're human, and humans don't always have the answers to everything.
Right.
So you don't want to be that guy or gal, right? Like, you need to, it's benefits you with your leadership team, benefits you with your employees, to just, open up and be willing to be a little bit vulnerable there and not have all the answers.
100%. And that's the thing, is like the job of a CEO or of an entrepreneur more generally is just to be a really quick learner, to be a very effective learner. Cause like, when I look at, I'm running an early stage company. And so it's like the only thing that I know about my projections for sure is that they're wrong. It's my job over the next couple of years to just figure out how they're wrong and to improve on them. Like that's the nature of any kind of forecasting. There's so much randomness and so many things to learn, like bringing a product to market in particular is just this constant learning journey where it's like, oh, I thought it was for this type of person. Actually, these types of people are responding a lot better. I thought that they'd like this feature, but this one that's been like buried deep down in the wood pile is like suddenly popping to the top of people's minds. It's you don't know half as much as you think, and so like closing that gap is the entire name of the game.
For sure, for sure. So just something that came to mind when the last thing you said about like features and customers and stuff, just shifting gears a little bit.
Mm-hmm.
How do you go about determining the feature set in the product roadmap? Like, you can't just listen to everything everybody says, right?
Mm-hmm.
I mean, you have to be thoughtful about what you're implementing, right? I mean, and there's obviously expenses and resources tied to that. So what does that feedback loop currently look like, and how has that evolved since day one?
Yeah, it's a great question because, I'd say a lot of it starts with founder market fit. I think that's very meaningful and something that maybe doesn't get enough airtime. For me, for example, I was solving my own problem. And so that gave me a serious leg up on trying to get my hands around, okay, here are the type of features that are going to be needed. Here's what I'm curious about. Here are the answers that I actually want in order to be able to make this jump, like that type of thing. So that's huge. I mean, that helps you at least short circuit a fair amount of the get outside the building and vetting the idea type of thing. And then, the bringing it to market, which is its own, strange beast to deal with, is where you need to up the iteration, up the cycles. And so for my case in particular, it was I guess conventional wisdom or now like neo-conventional wisdom is that if you're not embarrassed about your product when you bring it to market, you're waiting too long. And that, I tried to really take that on board, that whole lean startup mentality. But in personal finance, obviously you have to be a little bit more thoughtful because nobody's going to touch it with a barge pole if it doesn't have a decent face on it. I can't release something that looks like eBay circa 1997 and expect people to throw in their personal finance information. That's just not how the world works. And so I had to be very intentional and thoughtful about okay, here's what's worth investing in right now before I even do bring it to market. And here's what can wait. Here's what can, be reserved for version 2 or whatever. And so that kind of feedback iteration cycle, one thing that I've done, very intentionally over the course of the last year, for example, is just honestly, just cold outreach, talking with potential customers, talking with people who I think should find this interesting and just seeing what they think. And sometimes it's no, dude, not interested. What are you smoking though? Because I want some. This is crazy. And sometimes it's they're yeah, this is how I've been thinking about things all along. And here are some other people that I think you should talk to and all that. And so that, just assembling that mosaic of all that different feedback and then just seeing what the picture as a whole says to you. It's a process that I was very afraid of when I was just entering entrepreneurship. Whenever I read those, mainstay books about entrepreneurship, they're talking about the get outside the building phase. I was I saw myself as an introvert and I wasn't excited to go talk with a bunch of randos. But then it's suddenly as an entrepreneur, suddenly I had something to say. And so it's okay, this is a great, conversation starter. If someone's willing to hop on the line with me, they already know, kind of partway what I'm about. And so let's just have fun with it.
Yeah, I love that. I love that. So in the first episode of Scale by Design, we had on a buddy of mine, Jacob Garlick. He's a partner in a VC firm, and he spends about half his time in the Northern Virginia area. So it's interesting. We live in the same building, and then we also are offices in the same building.
Wow.
So we end up seeing each other all the time.
Right.
But yeah, so one of the things he's talking about, feature rollouts, I thought was a really helpful, probably a pretty basic insight, but sometimes those are the best. Because it just makes a lot of sense. It's one of those things after you hear it, you're oh, duh, but I don't know how intuitive it really is. But he's talking about basically there's two types of features that you need to sell, right? You need the features that people are going to use all of the time, right? There's the things that they're going to use, and then there's the things that they're not going to use, but they're going to ask for in the sales cycle. And so the example he gave was he was talking about I think his mother buying a car, right? And she absolutely needs one thing. It has to be, and she's going to use it all the time. And then she will not buy a car without a GPS system or something. right?
Right,
Even though
right.
she's never set it up, she will never buy the car without it.
Hmm.
And so I always thought that that was also kind of like an interesting component to product build out as well.
Totally. I mean, and that's the thing is like there's a ditch on both sides of the road, right? Because you can't bring something to market that just doesn't do anything. But meanwhile, it's like if you've built too many things into it, then not only can it be a waste of time and money, but also it can distract away from like the crown jewels. You know, like for example, I am sort of like an incurable builder. And so when I was building the product for myself, it's like, oh, what if we, you know, I'm an options trader also by trade or former trade. And so it's like, oh, well, if you tweak this thing, then what happens? If you tweak this thing, then what happens? And so like I just had this proliferation of random bells and whistles. And it's like, no, dude, you need to cut this down to the core. Like, what are the greatest hits? Like hit people with exactly what's going to be most useful for them. And then if they ask you for more, then you can entertain it. But like focusing on the important stuff is really important.
You want it to turn out to be like a Goldman Sachs dashboard.
Like seen my share of those. Yeah.
Like, yeah.
Well, I mean, and that's
yeah.
part of the nature too, is like in the ethos of my company in particular, like it's
Right.
all about simplicity, right? It's all
Right.
about taking some complex morass and boiling it down to something you can actually comprehend. And so like the default, like what happens in personal finance a lot of the time is like you get this 20-page sheaf of documents that's loaded with data, but completely devoid of information. And so it's like, okay, great. What am I going to, is this a doorstop? You know, like how am I going to use this like stack of papers? But like it's so much more valuable if you can distill it down to something that's simple. And so sometimes less is more.
Yeah, I hear you, man. Hey, so we have a few more minutes left. Can we talk about Yale?
Yeah, sure.
Okay.
Sure. Let's do that.
Yeah. So for those tuning in, Ben has a degree in economics and mathematics from Yale. Is that right?
That's right. Yeah. Combined major, not double.
Okay. Gotcha. Oh, you slacking, man. You didn't get the double.
I know.
Anyway, so I know that you had some interactions with Robert Shiller, and I don't know what all the classes that he taught or the subjects he taught. I'm familiar with his behavioral finance course because they had it accessible online for free, and I watched it in my early 20s. It was really impactful for me.
Mm-hmm.
I learned a lot about human psychology
Mm-hmm.
watching Robert. I was hoping maybe you could share if something comes to mind, like some of the top lessons you might have learned from Robert, just because I would love to hear that just personally.
Yeah.
If you could think of anything.
No, I love that. I mean, he's first of all, I'll say he's a great guy. He was my thesis advisor. And so I got to spend some one-on-one time with him while I was there. And it's something that like, I feel like it planted the seeds for some later developments in the sense that, you know, I don't know, economics is obviously like a constantly developing science. And I feel like it was kind of around the time I graduated in 11. You know, it was around that time that it was like, actually, you know what? Behavioral economics is kind of where it's at. You know, this whole like homo economicus, rational, you know, human type of thing. Turns out that's not the way people work. And so that's I think in a real way, you know, his participation in that like kind of original, you know, gangster of whatever behavioral economics type of role was impactful, you know, in like in a timed release or delayed sense, in the sense that like I went through the first leg of my career assuming that it was all about, you know, basis points. It's all about like, how do I increase my return? If I'm doing a crime against my family, if I don't choose the savings account that has the highest possible interest rate, you know, like that type of thing, just optimizing ruthlessly. And it took me a while to realize kind of, you know, this more behavioral economic phenomenon that's going on underneath, which is like, personal finance is finance, but it's also personal. Like people are humans, they're fallible, you know, beings that make bad decisions occasionally and are swayed by persuasive ideas and all that kind of thing. And so it's like that whole idea, you know, Schiller, for example, wrote a book, Irrational Exuberance, which, I mean, it's there in the title, irrational, like that's the way people behave in over very long stretches of time and repeatedly throughout history. And so it's like, appreciating the fact that people are not going to always necessarily know or do what's right for themselves, but that there's a role for just making it easier for people to do the right things for themselves. I think that's a huge upshot from behavioral economics. That's immensely helpful to the world, you know, understanding the way that we actually make decisions and idealizing ourselves as we are, or like, understanding ourselves as we are, and instead of as we wish we were, because I mean, for example, you take a look at like the Communist Manifesto. Great system for a creature that doesn't exist. Like that's like, you can come up with all these theories till you're blue in the face, but if they don't map onto reality, then ultimately, what are they worth? And so I think he was and is a pioneer in that space, alongside others, that really kind of got people thinking in a meaningful and reasonable way, about the way that people actually behave.
Yeah, I thought one of the things that impressed me the most was just there would be pretty complex topics that he could really boil down in a simplistic way and express it in a way that everybody understood.
Right. And that's real value. Like
Right.
anybody can spout off and give you a million words about X, but if you can, like, my dad used to say, if you can't make it simple, you're not that smart. Like basically that's the whole ballgame.
For sure. For sure. So last question, this is kind of goes to the behavioral piece in human psychology. I feel like so much when it comes to personal finance it does come down to psychology. It comes down to decisions. It comes down to emotions. And for me, it's like setting up process in such a way that takes emotion out of it on an ongoing basis. So can you make a few decisions in a moment that you can plug and play and automate that will then benefit you in the long term? Because if you don't have that set up, who knows, something happens at work, whatever, some people spend money to, they change their, to overcome certain feelings. I mean, there's just, people are so unpredictable in a sense that it's almost good to lock in your strategy out of sight, out of mind, and just have it working for you in the background. And I feel like just so much of personal finance is tied to like kind of locking in strategy and not letting human behavior just completely throw strategy out the window. Would you agree with that? Or
Absolutely. I think what you're touching on in my head, falls under the heading of systems, like basically putting in place structures that do exactly what you were saying, that like help you make that one decision that's going to prevent you from having to make 1,000 decisions in the future. Because I don't know about you, but like for me, it's like pretty predictably right around, 3:30 in the afternoon, it's like, I just start to get tired of making decisions. And so it's like, that's when I start, rummaging through the pantry and like finding something that I know I shouldn't be eating, because it's just like, I'm sick of making the right decision all day long. And especially now, modern society is flinging decisions at you day after day and second after second, like social media and whatnot. There's all these claimants on our attention that it gets very exhausting to try and have to make all those decisions on like a one-off type of format. But when you put in place those structures that will make those decisions for you, and you put in place those structures that simplify things, that's again kind of what my software is all about, is like, if you're running after this goal in the future, if like think of it like a running race, you can focus on I'm going to stay low, I'm going to get turnover, I'm going to like use my arms, I'm going to whatever, all the running tips that somebody would give you as a coach. Or it's like you can just go, hey, I'm going to run against that guy because he's really fast. And you're just like, catch up to that guy. Like, then all of a sudden things just kind of fall into place because you've just got one simple criterion that's like, okay, if I can make this happen, then I'll be good to go. So boiling it down to simplicity and putting in place those systems, is crucial.
Yeah, 100%, man. Are you aware of any, like, do you have any good recommendations for books, resources? Like, obviously, your product, and beyond that, like, books, resources for people to learn what they really need to know about personal finance. Like, none of like, just like, there's a lot of information out there. A lot of it's just like sales and marketing driven, not very helpful. Other other resources out there are just too technical. It's too much. I mean, do you know of any like simple, straightforward, actually helpful resources that people can pursue if they want to learn more about this stuff?
Absolutely. I think far and away the best book that I know of on personal finance is called The Simple Path to Wealth. That's by a guy named J.L. Collins. And the thing that's magical about that book is it's specific. So much financial writing is like, well, if you're this, then do this. And, by the way, consult your financial advisor and like all that kind of CYA type of stuff. And the wonderful thing about this book was like, he was writing it for his daughter. So it's like specific specific advice, like, listen, you should invest in this ticker symbol, and here's why. Like, basically, it's not like specific, hyper specific investment advice that everybody in the world should follow, but it's like, it's authentic and it's real. It's something that most people can see, like, okay, here's where this part fits into my life and here's where it doesn't. A couple other books that come to mind, I think The Psychology of Money by Morgan Housel, who's a VC actually as well. Like, basically, I think that's an outstanding book because it touches on a lot of the stuff that we've talked about earlier today about how, like, listen, people don't always behave rationally. Sometimes something that's not rational is in fact reasonable, and you should think about it. And the book that like really got me off to the races was Your Money or Your Life by Vicky Robin and Joe Dominguez. And so those three, I think if you've got those on your shelf, you're off to an awesome start.
That's cool. I love that. Well, thank you. And this has been a great conversation. I had a ton of fun chatting and talking shop with you. We're coming up on time here, so I just wanted to say thank you for participating and being part of the show. And if you're open to it, I'd love to have you back on in the future.
Feelings mutual. I had a great time, James, and thanks a lot for having me.
For sure. And for everybody tuning in, thank you, and we'll see you next time.